All right, here we are, last section of chapter 10, 10.4. We're going to post cash receipts to both an accounts receivable, again, there's that term again, subsidiary or subledger, and a general ledger. And again, subsidiary ledger all ties to a controlling account, which we're going to get into here. All right. And we're going to end up doing a schedule of accounts receivable more on that moment. That's what we said here. Prepare a schedule of accounts receivable. All right. So breaking this down for starters, again, we have numerous customers in our business, too many to have just in the general ledger. So we had a subsidiary ledger, just like we did for accounts payable. And then we have this thing called proving cash, which we're going to get to at the end. Proving cash, and we go through all of our transactions and prove that our balance in cash at the end of the month matches what we have in pause. What would that match? Our debit balance in our cash account, right? All the activity matches what our debit balance is in our cash account. All right. So there you go. That's what we're going to set out to do here. And again, similar to our cash payments journal, which we did with vendors and accounts payable, remember we have transactions inside of our cash receipts journal, which will need to get posted to our accounts receivable subsidiary ledger. All right. And so here's our cash receipts journal, and we received money from Lake Automotive. Now that's going to need to get posted to the subsidiary ledger for accounts receivable. And eventually, in totals, it'll get posted to the general ledger account for accounts receivable. Now, don't get confused by, why are we posting this twice? Well, the subsidiary ledger is the detail. The general ledger is kind of the summary. All right. So post here down, put down the date, the source reference. We're going to credit Lake Automotive. Now think about this. We have a previous debit balance of $987.92, and now we're receiving payment from one of our customers of $381.60. We're crediting accounts receivable, crediting the account, and we end up with a new account balance, the previous debit balance minus the credit, because remember, accounts receivable has a natural debit balance or debit increase side. When we credit accounts receivable, we're decreasing, correct? Okay. And then we go back and post in the post reference column the customer number. All right. And then we get into totaling. So we come down here at the bottom and we total all of our cash receipts special columns. We don't have any activity in the debit or credit. Okay. Every time we either get to the end of the page or we get to the end of the month, we need to total and prove. Do our debits equal our credits? Debits equal credits, that's like a standard basic element of accounting. And if ever your debits get off from your credits, you got, as Ricky Ricardo used to say, you got problems. All right? So all we do here is we verify the equality of debits and credits by lining up all of our debits, in this case, sales account debit, or sales discount, I should say. Remember, sales discount is a contra or opposite account to sales. Sales is a revenue increase side credit. Sales discount, where we allow customers to take a discount by paying us early or whatever, is a debit, contra to sales. And then we have our cash debit. And over here on the right side, in our credit column, accounts receivable credit, somebody paid us on account. Sales credit, we sold stuff for sales for cash at the register. And then sales tax payable credit, that portion that the customer paid us in sales tax that we now owe probably our state Department of Revenue with a monthly filing where we pay our liability to the state for collecting sales tax. We can't keep that money. And we come down here and we total it, and our debits equal our credits. Very nice. All right. Then there's this thing called proving cash. All right. we want to make sure that our activity matches what's going on in the bank. Before we can move forward to a new period, we need to make sure that cash matches. So we have our beginning balance. We have everything that came through on our cash debit column in our cash account. And we just have kind of a subtotal here, equals total, cash available, I don't know. And then we have everything that was in the cash credit column in our cash payments journal. Notice we have the cash receipts journal for cash received, cash payments journal for cash paid out. We come down here to what our previous subtotal was minus cash paid out. We end up with 52,465, and that should match our checkbook balance. Now, boy, that's a giant checkbook balance. If I had that much money in my checking account, I'd look to move something somewhere. We don't need that big of a checking account balance. We should do something with that money. All right? Proving cash. Then, posting special amount column totals of cash receipts journal. So we've posted our individual entries to the subsidiary ledger in our cash receipts journal to our various customers who paid us on account. Now we're taking our totals, in this case, accounts receivable, sales. We're going to get sales tax payable and sales tax credit, sales discount debit and cash debit in here as well. But here we're posting source reference, in this case, accounts receivable credit, 1164130. We subtract because we're crediting accounts receivable. That's an asset with a natural debit increase side. We're decreasing that. So we're going to take our previous balance minus the credit to give us 10,400.98. And you can see down here our sales. We credited sales for 43,000. This is cash sales. And our previous credit balance was 493. We're adding a credit balance and a credit balance. Sales has a natural credit balance. It's a revenue account. We add those together to get to 536. So you need to figure out, sometimes we get confused between, do I subtract? Do I add? Well, what's my natural increase side? What's my previous balance? Was it a debit or a credit? If I'm adding a credit to the credit, I add those together. If I've got a credit, my previous balance was a debit, I may be doing some sort of subtracting there, right? I'm reducing accounts receivable. And then finally, we go back and post our account numbers, 1130 and 1130 and 4110 up here. Then they rolled in sales tax payable, and we did the same thing, 2120. Then we rolled in 4120 up here. And again, we created a new balance each time. Then we rolled in cash, and in this case, cash receipts, we had a debit of 57,000. Now, see, here's our cash receipts journal, and here is our posting from our cash payments journal down here at the bottom. We're just focused on this line where we added $57,000 to our cash account, come up with a new debit balance. Okay? Debit's increase side, right? For cash. Okay, well, that was quite a bit there. All right, we just did the 5-step posting process. Now we have our completed accounts receivable. All right. And the debit balance at the end of the month that we show here for each customer represents how much that customer owes our business. Now, accounts receivable is an asset, and it's good that we have an asset that we've sold and these people owe us money, but I can just tell you from previous experience, you want to make sure your customers are paying you on a regular basis. If they start sliding or are late, somebody in your office is going to be responsible. That might be you if you're the new person, responsible for calling up and getting commitments of payment from your accounts receivable customers. Now, when I first did this, the company that I worked for, we had a subsidiary ledger of about 50 to 100 accounts receivable accounts. And any one time between 5 and 10 needed some sort of attention. Hey, are you paying us off? Hey, your balance is growing, you haven't made a payment in 60 days, that kind of stuff. Man the phones. There you go. And we're going to get into a schedule of accounts receivable here in a moment. A listing of customer accounts, account balances, and total amounts. And we just did this with accounts payable. This is a schedule of accounts receivable. And some businesses call that an accounts receivable trial balance. Schedule accounts receivable trial balance. Okay. And that would look like this. Okay. At the end of every month, you want to prepare this schedule. A, because you want to see who owes you money, but B, you also want to tie it to your balance in accounts receivable. When we go through the Mind Tap lesson, I'll make sure I show you kind of exactly what I mean, because I want to make sure that my schedule, my subsidiary ledger, and the summary of that matches what I have in my accounts receivable account. Okay. Again, all we're doing is just putting each customer's name, what their balance is, what they owe us at the end of the month. Okay. Which column? The cash receipts journal, amounts posted individually to the accounts receivable ledger. Where's that coming from? Well, we have a special column called accounts receivable credit on our cash receipts journal. What's the other name for the schedule of accounts receivable? Accounts receivable trial balance. Very good. All right. So enough of that. Let's go to MindTap 10.4 here. MindTap 10.4. I'm going to get my handy dandy adding machine out over here. Have it ready somewhere. There we go. Okay. And first of all, we've got total improved cash receipts journal. Okay. So I need to total my columns. So I'm going to do some adding here. It equals 2189.36 plus 390.34 plus 15090.45, 408915. Total sales credit 5326.3 plus 5624.45, 10950.75. Sales tax credit equals 298.15 plus 320.59, 618.74. Sales discount 43.79 plus 7.81, 1.6. In cash debit equals 2145.57 plus 5624.45 plus 382.53 plus 594,504 plus 1509.45. Now, if I'm going too fast, that's okay. You can slow me down. And there are my totals for my cash receipts journal. Let's make sure that, now I got zero. By the way, I need to put zero over here. Zero for debit, zero for credit. I got zero debit. I got zero credit. I'm just going to pull those numbers down. 4089.15, 10950.75, 618.74 sales tax payable credit, sales debit 51, sales discount debit, 51.6, cash 5607.04. I do my total debits, the beer debit equals that plus that plus that. Total credit, that plus that. There, I just proved it. 15,658.64, 15,658.64. All right. So I've totaled my columns. Now I'm going to prove cash. Oh my. Cash on hand at the beginning of the month. What gives me that? 11,486.16. How much was my cash received in my sales journal? 15,607.04 was my increase to cash. I'm going to do a subtotal here. 11486.16 plus 15,607.04. And again, I don't really know how to describe that other than it's a subtotal. Excuse me. All right. Less cash paid out. Well, that's coming from the cash payments journal. I don't have that in front of me, but it says credits posting the cash account were 9484.24. 84.24. And my difference is going to be my subtotal minus cash out. 17,608.96 is what my cash balance should be. And according to my last check stub, I had that in my account. I just proved cash by summarizing what's in my cash payments and cash receipts journals, in addition to what my beginning balance is, and matching that up against my last check stub and what the balance is. Okay, grade step. I think we're good there. Hope we are. Oh, where did I mess up? Let me guess. I didn't go back and. Oh, 27. Oh, I transposed that. Oh boy, I had the right number there. I just didn't put the right one in there. I got everything else right though. That's weird. Go figure. This is live. I'm not going back and starting over. Next step. Okay. Due to blah, blah, blah functionality, we are posting to the cash receipts journal, from the cash receipts journal to the accounts receivable ledger. Okay. So here we have Lenny Stafford, who paid us on account 2189.36. Remember, I'm posting the amount from the cash receivable credit special column. So on the 3rd, in CR9, Lenny paid me 2189.36. Well, his previous balance was 385.36. He paid me 2189.36. Previous balance was a debit. I credited his account for the payment. He now only owes me $16.96. I go back to post reference. Lenny Stanford, 110 is his customer account in the accounts receivable ledger. So that's posted. Next one, I don't need to just put I just put a check mark in there because they're all special column entries. Well, and they're not accounts receivable, I should say. There's nothing to post individually, I should say. Venice Cafe, next, on the 8th, cash receipts journal 9, credit for 390.34. Previous balance was 3103.94. I'm subtracting 390.3. That's confusing. All right, give me 2713.6. Previous debit balance, credited, payment on account. We subtract the difference, debit minus the credit, give us a new balance there. Go back to Venice Cafe, 120. Finish the post. Washington City Schools. Well, here's I have another check mark here, by the way. Washington City Schools on the 28th. Cash receipt to 9. Credit for 1509.45. Previous balance for them was 4038.45 minus 1509.45. Give us 2529. Go back and show that as being posted like so. All right. and we've posted our cash receipts journal entries to our accounts receivable subsidiary ledger to our customer accounts. How did I do? Two out of two. Didn't get that first part perfect, got the second part perfect. Thank you. All right, post to general ledger. I've got my totals down here. I now need to post the general ledger, starting with debit. General debit and general credit are going to just be check marks. Accounts receivable credit. Now remember, I already posted to my subsidiary ledger, but now on the 30th, I need to post from cash receipts journal 9. I need to post a credit of 4089.15. Previous balance was 11027.75. Debit minus 4089.15 credit, a payment on account, leaves me with a new balance in accounts receivable 6938.6. Go back 130. Excuse me, that's a lie. Let's put the right account number, 1130. Finish my post. Next, sales credit on the 30th, cash receipts 9. These are cash accounts, cash sales, at the register. We rang it up as a cash sale. Previous balance was a credit. This is a revenue account, natural balance credit. We credited it, so we're adding. Previous balance was 191,885.31 plus 100950.75. New balance 202,836.06. Okay. Back to our posting 4110. Okay. Sales tax payable, cash receipts 9. And that'll be a credit balance of 618.74. I'm surprised we didn't pay our previous credit. This is kind of weird. We should have paid that $2,700 during the month and had a zero balance. For some reason, we still owe the state that money. So our previous balance is 2733.78 plus 618.74. And by the way, you would probably, if you operated in multiple states, it's just an aside, you would have different sales tax payable accounts for every state you operate in. All right. 2733.78 plus 618.74. Okay. Go back and show that as being posted. 2120. The sales discount account, CR9. Debit of 51.6. Previous balance 721.06 plus 51.6 is 772.66. 4120. And then finally, cash, CR9, debit of 15,607.04. Previous balance 2,192 plus 15,607.04. 17,608.96 and 1110. Okay, stand back. Everything's posted. Everything's posted. I put my references in there, cross-reference, post-reference, I should say. Looks good, great step. Yep, nailed it. Okay, posting was successful. And finally, AR schedule. Lenny Stanford has a balance of 1696. We're going to put that into the schedule. Bennett's Cafe has a balance of 2713.6. And Washington City Schools balance of 2529. Total those up. I'm going to show you something here really quick. 6938.6. How do we know that's right? And that's our subsidiary ledger, our accounts receivable subledger, 6938.6. How do you know that number is right? Well, as you can probably guess, with every subsidiary ledger, there's what's the term? A controlling account, accounts receivable. So if I flip back to the previous step and look down here at what I posted to accounts receivable, I got 6938.6. That's my controlling account. That should match what's in my subsidiary ledger, correct? Yes. Okay. So we're done with that grade final, and we're good to go. 2.2. All right. So you'll be working on your own working papers 10-4. And let me know again if you have or need any help with what's going on here. All right. Have a great day. Thank you for watching.